Looks like my... Okay, can you guys hear me over in YouTube and Facebook? For some reason, my audio was not being picked up there. So basically what I was saying is that the market has, huge short squeeze, short covering rally up off of the lows. They hit the daily 200, the weekly 50, and the monthly 10. So yeah, thanks guys for letting me know that there was no audio. But yeah, so it came up all the way there. The other thing that I was looking at was that price has filled the gap between price and the monthly 10. And you can look at a lot of individual stocks and kind of see the same situation as well. Now, let me go over to the SPX, because there are some things I want to show and kind of talk about as far as this bigger picture. There's a lot of debate out there of, are we in a bear market and this is a bear market bounce or a bear market rally, or is this actually the beginning of a new uptrend? So, let's kind of leave those labels aside and we look at the charts and the moving averages and see what those things tell us, because ideally for us, since we are swing traders and traders in general, technical, this is what we're really looking at and looking for are, for me, moving averages. If this is going to continue to be a bear market, then generally speaking, we should watch for price to continue to get rejected by the underside of the downtrending monthly 10. Now, if we take this and we go back to, say, a different era, and this is kind of interesting, just kind of, 30,000 foot view level of the markets and what's going on out there with the economy and interest rates, inflation, all that kind of stuff. Let me bring you back to basically the 60s and the 70s. And I think it was, of course, Michael, I forget his name right now, Michael Burry, there you go, the guy from The Big Short. And he was kind of bringing up the idea of a bullwhip effect. And he initially was talking about it in relation to supply chains. But then he was kind of talking about it as far as the Fed and inflation and the markets. And the idea, I think, right now, and again, kind of spitballing here, kind of just talking about bigger themes and being prepared. Like if we start talking about these ideas and we think about it through our brain and we kind of have these open-minded ideas, then we can be prepared for when, say, the irrational happens. And what we might be kind of in a situation of is this from, say, the 70s, 60s into the 70s. Notice how, well, if I can draw a better line, let's see if I can do that. You can see here we've had higher highs, but then you can see here we had lower lows. You can call that a megaphone. You can call it, bullwhip, something like that. And I'm just wondering, I'm just kind of putting it out there, because we have seen a lot of stocks come up off their lows recently. We're 90% of stocks are above their 50-day SMA. While that might be too bullish, sure, it is something that we need to think about a little bit. There is broad-based strength out there. Now, I will also agree that a lot of these stocks, they've had their huge moves, they're big moves. But for what I talk about, and you guys in the Moxie area and even the free trading room, you guys know what I talk about the 50-250 maneuver on the daily charts. I think we're seeing a lot of that, so I am definitely expecting a pullback. But if we look at the market as a whole, and we look back here on the monthly time frame, I'm just kind of putting it out there that as the Fed continues to basically chase its tail about inflation, and if Michael Burry and some of the other people who talk about inflation are correct, then we could be getting into this situation where this is what it looks like when the Fed is chasing its tail and trying to chase inflation. So what we've done currently, in 2022, they have tightened the monetary policy. So they have, they've raised interest rates. They're pulling back on how much money or bonds they're buying, how much money they're putting into the market, all that kind of stuff. And they were looking to see if inflation would come down. Okay, it did. And what you can see is, maybe like this, that back then the market did pull back. Let's see if that was a 20% correction, because the market did go down 20%. And it's kind of like Pavlov's dog, that when you get a 20% correction, you buy the dip, right? So yeah, look at that. That's about 20% correction right there back in, call it 1966. So there's your 20% correction and people buy the dip. And again, just kind of making things up. But let's say that currently the Fed is trying to tighten the monetary policy, and they've seen that inflation has ticked down. We've reached peak inflation, all that kind of stuff. Yay, soft landing. The market got demolished because if you look underneath the surface, a lot of names got torn down 60, 70, 80, 90%. Like, no joke. There are names that got torn down 90%. A lot of those speculative names in 2020 went all the way back to where they came from. And so maybe there's a bit of a reset. And inflation's come down, all that kind of stuff. So people are like, hurrah, yay. The Fed is not going to get more aggressive with the interest rates. They're actually going to get less aggressive with the interest rates as they see that inflation comes down and all that kind of stuff. Cool. So maybe what we get is price to actually turn around and go higher. And what you can see, and let me kind of maybe zoom in a little bit so you guys, and you can go look at this on your own back, 1966. And maybe what we do is you can see that there was a gap between price and the monthly 10. And what happened? We did get back to the monthly 10. But then what happened is we actually went sideways and broke over the monthly 10. Therefore, the monthly 10 was no longer resistance and we kept going up. What if we are in a situation like that now? What if we actually do start a new bull market and nobody's expecting it? Like, oh man, everyone's fighting over this and people are still short and all that kind of stuff because we've been seeing some massive short covering rally in this current market. And so what if we get that for a while? But then, we make new highs over a course of time, like whatever. But then what happens? Well, demand starts picking up because inflation's down. And then inflation rears its ugly head again. And inflation starts going back up. And everyone's like moaning and groaning again. And all this is a big problem. And it is. Inflation's a bad problem. And so the Fed's like, man, oh crap, we're gonna have to tighten again. So they go through another cycle of tightening. They raise interest rates, they pull out money supply, stocks go down again, and they reset. And what do we got here? This is like about a 35% move. So that a 35% bear market on average is a bear market during a recession. Because remember, we now have 2 quarters of negative GDP growth, which technically is a recession. Now, the interesting thing is that 2020 was such a unique time, such a different time, that it pretty much blew everything off the charts, including maybe GDP and all this other kind of stuff. Like, right? I'm sure you guys have looked and seen some charts of what our GDP and growth and some consumption and all these other things. And they spiked crazy off the charts. What if, and again, posing these questions to you guys so that we can kind of think about this so that we're not too surprised when the markets do whatever they're going to do. What if the, say, pullback in GDP, the 2 quarters of negative growth that we've been seeing, what if that's actually just a reversion to the mean? If we look at it, what if, let me kind of do this. What if, here's GDP kind of doing its thing, and then 2020 comes along, right? Big old spike. And what if the 2 quarters of negative growth is actually just us getting back on track to where we were going? And so really, we had 2020 as the crazy thing, and then this is just the reversion to the mean, and then we just get right back on track. And what if, what if that actually, what if that happens? And that's what we saw. Shopify was talking about that because they had some charts that were showing the adoption of online sales, and it basically just blew through the roof like this. And you could they had a trend line that carried, and you could see that basically after 2020, when people kind of got back to their lives and stuff, you could see that the return to the mean of people buying online and adoption of internet buying, all that stuff kind of reverted back to the mean of the normal growth rate of acceptance. So I kind of had to take that idea and wonder what if the economy is going to do the same thing. So we can have that. And but then maybe later we get into a recession. Okay, a little bit later. Okay. Then you get this, and then this time, look at this. You can actually see now price is getting rejected by the monthly 10. Okay, it actually gets rejected twice. And then they tighten, and then we see inflation go down, and yay, okay, the Fed pivots again, and they kind of get less hawkish, and they actually back off a little bit. And then you can see here we break through the monthly 10. Now we're off to the races again. Now we're off to a new bull market. But then, a little while later, inflation starts picking up again, and oh boy, this is a problem, and we got to do some stuff, and so maybe they tighten again. And then you can see here, once again, get rejected by the monthly 10 SMA, and we come down. And then I'll have to look where, and I think it was right around here, they had the gas crisis, and I forget what year Paul Volcker did his thing. But, you know, then what if they really then at that point fix inflation? Because let's see, how far down did this one go? You know, that was like 48%. You know, that's a major bear market. That's going to, you know, clean the slate basically. And then we go up from there. So it's going to be really interesting. And I'm talking about this just because we have been seeing quite a lot of activity off the lows recently in the market. And things are looking like they're trying to stabilize. You know, it looks a little bit like risk is trying to come back on. Out the, you know, cannabis is coming up. You know, we've seen a lot of, like, Carvana has been basing. You know, we've been seeing a lot of things that are just they seem like they're ready to stop going down. And if things don't go down any further, they tend to move up. And I just kind of want to put that out there for you guys as some ideas of what we could possibly be getting into. So, Tony, yeah, the $64,000 question, right? What does this mean to you as a trader, and how do you make money with this information? Well, as an investor, let's say if you're a long-term investor, this is probably a nightmare for you, because if you are like kind of buy and hold and you're looking at this, you're like, wow, that's a decade that the market just didn't go anywhere. It basically went sideways. For us as traders, and Tony, I have a feeling you've been seeing the activity out there, right? You've been seeing that we've had some pretty big moves. Carvana is 100% off its low, or off a buy point that I saw. I think it might have like tripled since its low. Like, we're seeing things that have had some pretty extreme moves. Mara, I forget how much Mara is up. The Bitcoin miners are up quite a bit. So for us as traders, what this means is when the market starts to roll over, we can trade it to the downside. It might not be that easy, but we can do it if we want to. And then what you do is you just wait. You wait for those bear market bounces. You just wait for something. And then what you'll see is, you know, you'll see the landscape suddenly clear up. You'll see names start to pop up like we're starting to see them. And we could take advantage of that. And based on my Moxie trading stuff, you know, the first move versus the second move, the 50-250 maneuver, you know, the elf shoes, all that kind of stuff, we will see those. And then we will be able to trade. We can trade when we get a bounce like that. We can trade if we get a new bull market like that. You know, that's going to be great for us. And then we'll also, because we're traders and we're down here in the floor and seeing all this stuff, we're going to see when the dip comes, and then we can buy the next one. And we're going to see when these things wear out, and then we can step aside. So this might actually be great, because think about it. If the market gets down and refreshes and then we get a new bull market, that's amazing. And then if we get a correction and then we get a new bull market, that's amazing. And if we get a correction, we get a new bull market, that's amazing. So think about, you know, if we just have to ride out or wait out these corrections, the clearing of the landscape, you know, the clearing of the brush in the forest and the new regrowth, like, that is amazing. There are amazing opportunities. You know, Carvana, over 100% off its lows. That's the kind of stuff we can grab. Mara, you know, the Riot, the Bitcoins, all those kind of things, the things that just get demolished. You know, a lot of things then go on sale and they provide us amazing buying opportunities. So all we have to do is kind of ride out these downtrends, and we can trade short if we want to. And it might actually make things easier for us. They give us a lot of information to go with. So yeah, I would say for us as active market participants, it should be great. It really should be great. As far as investors, it's probably going to be them pulling their hair out, because, you know, it's going to be sideways for a very long time if something like this happens. You know, I have no idea. I'm really just spitballing with you guys, but I'm talking about this because I am seeing quite a bit of strength out there. I am expecting a pullback, but I'm just putting it out there. Like, let me go back to here, the daily chart. I'm just putting it out there. What if eventually, and this is going to take this is going to take some time, eventually, when price finds that the daily 200 area is resistance, and it eventually comes back down to the 50, and let's say it actually finds the 50 as support, and price goes up, it's probably what very few people are expecting, is if price goes up once it tests the 50, then we're going to be off onto a new bull market, and that's going to be a great time for us. Now, if price from this area comes back down to the 50, kind of does some stuff, and then continues to fail, then it's a new bear market. And you step aside and you get out, and things are, you know, it's going to be rough again. So that's literally how we play this. And I'll show you. Let's see. Yeah, so here. Here's 2008. Here's 2008. You see here how price got rejected by the 200, and then you see here how price just failed and continued down. That's the continuation of the bear market. And that's my point. Like right now, I think we're here. I think we are right here. And I think we have one more move to the upside, and then we start heading back down to the 50, and we'll see where we're going to see where we're at. You know, we'll have to see what happens. But I think that's where we're at. And if you guys want to see an example of a bullish one, let's just kind of NEO. I think it's in IO. There we go. Now, this hasn't confirmed. It may not work, but I think it gives you a glimpse of what to expect if it's going to be potentially bullish. So what you can see here is price pulling back into the 50, just like what I'm showing you for the 2008, and just what I'm saying that I think will eventually happen in currently. And what you can see here is if this continues to hold and that 50 holds and price eventually goes up from there, there's your bullish. That's now how we can show that price has held the 50, and then we can move back up. Let's see, let me show you ARRY. Just kind of showed you this, showed the Moxie group this last night. But look at this. Here is ARRY pulling back in, let me do that better, pulling back into the daily 50, and it held. That's bullish. So fairly simple. We don't know what's coming yet. All I know is that we should be getting a pullback in the next few weeks, probably to the daily 50. And then that's where we're going to find out. Like that's where the rubber is going to meet the road, is what we do there. All right. So since I have ARRY, Nasir, let's see. Yeah, thanks for the throat comment. It's doing a little bit better. Let's see. Daily 21 is exponential, while the 50 is simple. Yes, that's correct. So 8 and 21 EMA, 50 and 200 SMA. Yes, that 50 is quite far below right now, but if we can get flagging action, then maybe it will curve upwards like your ARRY example. Nasir, you nailed it. That's exactly right. So you can see it here with ARRY. If we're right here with the S&P, because that's the first time that price is hitting that daily 50, and you're looking at the 50, you're like, wow, that's a really far distance down there, and that's going to be real bad if price goes to the 50. That's true. But I don't think that's going to be what happens, because that's not typically what we see. You'll see that price basically bounces around and does some flagging action and just does some whatever, a topping pattern. And then you can see that by the time price comes down to the 50 has moved up. So yes, you're 100% correct. You understand it, and you've picked it up and you got it. You can see the same thing with NEO. Let me get that kind of angled up there. You can see that when NEO topped out, where was the 50? Way down there. You're like, crap, that's not going to be good. But look how much, it took some time. And even when it started going down, it took some time. And where did the 50 end up by the time it met? Up there. So yes, it's going to take some time, and the 50 is going to continue to move up. And we're going to, we don't know where it's going to be, and we don't know when it's going to be, but the 50 will be higher and further to the right when price does finally meet it. Mark, the reason why we're hanging on to longs is because I think they're like Tesla. If you look at this, what I think that the market is going to do is just like Tesla. So Tesla and the market both hit the 200 right here as resistance, right? And yes, it will pull back. But what did Tesla do? It found support, and now it's back up. So I think that's what's going to happen. And we'll have to see. We'll have to see how much of a pullback. We'll have to see how names respond to the pullback. But I think that the pullback for now will be into strength, and that there will be a bounce after the pullback. Mark, also, if we look at Costco, I've been using this one as an example. Look at Costco. Pullback, pullback, pullback. And in all three of those examples, especially the last two, it has bounced. So that's why I'm saying I don't think that the market is ready to end itself. Like, I don't think it's done yet. But it could be in a topping process. But it can take some time. It can chop around, and it can still bounce. And that's kind of what I think is going to be happening. I think we're still going to be bouncing for a while. And I think based on, depending on which chart we're talking about, because some charts are definitely at resistance and I wouldn't be long on them because they're going to pull back and they've had a huge move. But I do think that there are some names that are still coming up off the bottom. They're still not going down. And I think that if they can handle the market doing a pullback like this, then the next time the market goes up, then they'll pick up. And then the market will kind of, cool off a little bit and then move up. And so really what this is going to be is it's going to be about how do names handle the pullback. So let me just say, I'm trying to think what other, I'm trying to look at, think about examples off the top of my head. I really like the Costco example, but then let's look at MJ. This has kind of been one that I've been talking about. MJ is the ETF for the cannabis stocks. And I'm just kind of showing that, look at this. It sure seems like that's a bottoming pattern. It's not a bounce in a downtrend. It's not a bounce in a downtrend. This legitimately looks like it has stopped going down. It hammered out a bottom. It did put in a double bottom. The Moxie indicator has been over 0 for a long time. The Moxie indicator here on the daily charts really crossing. We've got some positive divergence. Like this looks like it's kind of done going down. And so I look at this as the whole sector of cannabis, which we know is super risk on and got hammered, and there's just been no life, no activity in here. And I'm just kind of thinking like, if the market is actually trying to figure out a bullish pattern, like let's say that the market actually holds the daily 50, and then the next thing we know, a few weeks later, the market actually breaks up and over the monthly 10 and we're in a new bull market. Well, then sectors like this look like they are preparing themselves to take advantage of that. Now, if the market ends up being bearish, sure, these things could roll back over or sputter or just do nothing, and then there's nothing there. How about space? Look at this. Now, space got trounced totally. This was a hot garbage back in the day. But what I'm noticing is it's kind of slowed its descent, and then it put in a double bottom, and now price is actually trying to get back over the daily 50. They don't necessarily have to work, they don't have to scream up and rip roar and all that kind of stuff, but it looks like it's trying to hammer out a bottom. And it looks like it's trying to put itself in a position that if the market goes up again, it could be ready. And let's see that. Look at Carvana. Carvana just got hammered, absolutely hammered. But while the market was still going down over the last few months, it was going sideways. It started to build a base and started to doing this. And then you could see that price started to get through the daily 50. And in this case, they had a pretty good move. Now, I definitely don't want to be buying this. I want to be looking for a pullback. But that's what I'm curious about. Like, what if the pullback is actually into strength and it holds, and then we get the next move up? I think that looks potentially promising. And I'm kind of wondering that if individual tickers are giving us some signs like this, the market might actually be trying to correct itself and build a base and actually start to set up. Now, of course, if the market is weak and we eventually break below the daily 50 and we go back into a bear market, then, I would expect Carvana to go like this, and it might even go lower, or it could just go sideways and not do much. Totally possible. I'm definitely taking both sides of this example, and I'm not pounding the table saying yes, bull market, and I'm not pounding the table saying yes, bear market. I'm saying we've seen some things change. It's giving me some clues. We're at a point where we want to see names like this do a major pullback, and then we're going to have to watch and see if that pullback is into strength. And if it's into strength, then we need to not fight that, and we need to go with it, and we could be in a new bull market. If the pullback is into weakness and it fails and it stumbles and it can't do anything and it's garbage and it breaks new lows, then it's a new bear market, and we're out of it, and that's no problem. So that kind of stuff. So let's see. Top spin FTNT. See what's going on there. This one's really hard to read. Honestly, I don't know what to tell you here. That's super difficult for me to read. If I come over, I just really can't say much. The only thing I can maybe point out is it's kind of been holding this level, and if it can continue to hold that level, then great, you can find your up move. But boy, yeah, I can't really do much with that one. I would be careful about shorting it because you should just look. It really hasn't wanted to break lower. So is now going to be the time that it goes lower? Maybe, but you're going to have to get that thing to actually break lower if you think it's going to go lower. Yeah, it's yeah. You're going to have to make it break. So yeah, the tough one on that one. Also, yes, top spin. So I think the guard line is the monthly 10. Yeah, I think if price can stay above the, like eventually get back over and stay above the monthly 10, then yes, I think we can go long. But I will know that information a little bit better down on the daily and the hourly time frame. So the monthly 10 is just such a big chart. It's going to be hard to really know that from that time frame. It's too big, too slow. Yeah, enduro. So kind of look up into the bullwhip effect. I'm starting to feel like we might be getting into that. The rut IWM, it's basically the same thing as the rest of the market. It is up here at resistance. I'm expecting a pullback, but I'm not expecting it to go straight down. It's gonna pull back. It's gonna bounce. It's gonna do some stuff, and then maybe it comes back down. So I think we're going to be in a, say, topping thing, which means that there can still be some upside possibilities. Apple, no, don't go. I wouldn't go long on Apple. Like that's crazy to go long an Apple right here. Let's see if this trend line does anything. Let's see if I can kind of move that around. Yeah, I would not go long Apple. I mean, it's so. I mean, come on. That's like the last inning of the move. You'd be coming in at the last moment. I mean, you're also coming into previous resistance area. Wait for a pullback if you're going to go long, but I wouldn't expect that pullback to go very far, or the next long move on the pullback to go very far. I would imagine that price is probably going to pull back to something around the daily 21, and then it's going to bounce, and then we get a pullback. So I would not go long here. If you're going to go long, you have to wait for a pullback. And then I got to get going, but Shopify, same kind of thing that I'm talking about with the rest of the market. This thing looks like it's trying to put in a bottom. Now, of course, they can always break lower. If the market's weak, sure, they can make new lows. But it has done a remarkably good job of hammering out a bottom, and now it's over the daily 50. And if it can kind of, do something here and eventually catch some strength, then okay. It's not really my first choice, but we are seeing a lot of charts that are like this that I think are trying to show that price is kind of, trying to hammer out a bottom in a larger sense. So. All right, guys, thanks again. I got to get going. And, those in the Moxie room or even in the free trading room, I'll see you guys in the options room in about 30 minutes. So.